And Korea is giving the market a strange signal today. Hey, stocks can rise while the Korean won currency weakens. But that only works until policy has to defend the currency. Welcome to Dragon Bullion. Yeah, the key signal today is not a normal broad bull market. Korea is strong in the places tied to AI memory and semiconductor leadership, but the broader market is still selective. That is why the KOSPI can look strong while many investors still feel that the rally is narrow. Yeah, the market is paying for visible earnings, visible chip demand, and visible AI infrastructure spending. Samsung Electronics and SK Hynix remain the gatekeepers for the Korean equity story. Nvidia, Micron, TSMC, and related AI CapEx names remain the outside confirmation points. The unusual part is the currency. The Korean won currency is not strengthening with the equity. The dollar-won exchange rate is still elevated near the 1,537 won area, and the report treats the 1,600 won area as the first major policy line. If the dollar-won exchange rate moves toward that line quickly, the question changes from how high stocks can go to whether Korea has to defend the currency. The plan is conditional. If chip leadership holds, Micron guidance supports the AI memory cycle, and the dollar-won exchange rate does not accelerate toward 1,600 won, pullbacks in leaders can still be watched. If FX pressure rises with rate hike guidance, defense comes first. The Korean equity message is narrow. The opportunity is concentrated in large semiconductor names and AI infrastructure, linked leaders. That is very different from a market where every lagging sector suddenly deserves capital. Yes, Samsung Electronics and SK Hynix matter because they sit directly inside the AI hardware profit chain. The report's price snapshot shows Samsung Electronics near the 380,000 level and SK Hynix near the 468,000 level in the local Korea market. Those are Korean market quotes, not US dollar conversions, and they should be read as local market evidence. Yeah, the condition is a relative strength. If Samsung Electronics and SK Hynix remain stronger than the index, the market is still accepting the AI memory thesis. If those leaders give back gains while the KOSPI weakens, the rally becomes vulnerable. Yeah, late buyers need a different rule from long-term holders. Low-cost holders can manage the cycle around earnings and memory demand. New money needs better entry prices because the same company can be a good asset and still be a poor entry after a crowded move. NIST's 1IKRW is the pressure line for this market. Yeah, but that structure has a limit. Around 1,601 per US dollar, the policy focus can shift. Korean authorities may care less about pushing equities higher and more about defending the currency. That can bring stronger verbal guidance, tighter liquidity expectations, or rate hike pressure. Yet, this is why investors should not look only at the KOSPI chart. Watch whether the currency is merely high or actively breaking higher. A stable high range is one thing. A fast move toward 1,601 is different because it can change the policy reaction function. Yep, buy condition is chip strength with FX stability. The reduced condition is chip weakness plus the dollar-won exchange rate moving toward the policy line. If those two warnings appear together, the market is no longer giving a clean pullback. A U.S. rate story is also conditional. The Federal Reserve may find it hard to raise policy rates quickly because short-term Treasury issuance has made interest costs more sensitive to the policy rate. That gives growth assets some time. But that does not mean rate risk is gone. Market rates can rise even if the Fed hesitates. If the 10-year yield moves higher, AI infrastructure and long-duration growth assets still face a higher discount rate burden. That matters for Korea because AI memory demand depends on continued data center and semiconductor capex. If US rates pressure the capex cycle, the Korean semiconductor trade can lose momentum, even if the local story still sounds strong. Yeah? The condition is not simply whether the Fed hikes tomorrow. The condition is whether market rates, WTI, inflation pressure, and Treasury funding concerns start moving against growth together. If they do, the AI trade needs smaller size and better entry discipline. AI is a broad theme, but the report's investable center is still semiconductors. Chatbots and software products get the attention, but the clearest cash flow today is in chips, memory, foundry capacity, and data center infrastructure. Nvidia is the global capex signal. TSMC, Samsung Electronics, SK Hynix, and Micron show whether the spending is becoming orders, margins, and capacity expansion. If Micron guidance confirms strong demand, the Korean memory trade can stay supported. And the risk is a guidance gap. Strong recent results are not enough if future capex or memory demand commentary weakens. The market has already paid a premium for AI infrastructure. It needs evidence that the cycle is still moving. Yeah, for US, this means Korea should be treated as a semiconductor and AI infrastructure exposure, not as a random emerging market rally. Use the actual Korean quotes as Korean market data and do not fabricate dollar prices from a simple FX conversion. China is the background risk for Korea. China may be strong in AI usage and implementation, but the report argues that the money is still concentrated in high-margin semiconductors. China does not control that profit pool in the same way Nvidia, TSMC, Samsung Electronics, SK Hynix, and Micron do. Yet that creates a policy problem. If China funds domestic semiconductor production without enough margin or global competitiveness, the spending can become bad money instead of productive money. It can absorb capital without creating enough return. The property and local government finance model also remains weak. If Wuhan pressure forces tighter policy, China can face a difficult mix of real estate stress, weak consumption, and expensive technology investment. Crypto is not the leader in this report. The core market signal is semiconductor leadership versus FX and rate pressure. Still, Bitcoin and Ethereum matter as risk appetite check. Yeah, the report's price snapshot shows Bitcoin near the 94.265 million level and Ethereum near the 2.503 million level in the local Korea market. Both should be treated as liquidity indicators, not as the center of the equity trade. If investors are selling crypto to chase AI and semiconductor stocks, crypto can remain weak even while Korean chip names move. That does not automatically kill the stock trade, but it means broad speculative liquidity is not healthy. The rule is simple. Do not chase altcoins before Bitcoin and Ethereum stabilize. For equity investors, do not call the market broadly healthy if crypto keeps weakening while only a narrow semiconductor group holds. Yeah, the buy plan has 4 parts. First, Samsung Electronics and SK Hynix must hold relative strength against the KOSPI. Second, Micron and Nvidia linked guidance must support the AI memory cycle. Third, the $1 exchange rate must avoid a fast move toward 1,601. Fourth, US market rates and WTI should not create a fresh inflation or discount rate shock. If those conditions line up, pullbacks in leaders can be approached gradually. The word is gradually. After a strong move, the market rewards patience more than impulse. The reduce plan is also clear. For crypto, Bitcoin and Ethereum come first. Altcoin strength without Bitcoin and Ethereum confirmation is not enough to call risk appetite back. Here is the market core. Korea can still rise because AI memory and semiconductor infrastructure are real profit channels. But this is not a broad market, and it is not a free chase. The X signal must be checked against Samsung Electronics, SK Hynix, Nvidia-linked CapEx, Micron guidance, the $1 exchange rate, WTI, and US rates. The currency line is especially important because 1,601 can change the policy question. Tine sit to dava ban in day men dehim. Phase buying on pullbacks makes sense. If chip leadership weakens while the $1 exchange rate pushes toward the policy line, defense comes first. Good assets still need good entries. In this setup, the edge is to let earnings, FX rates, and liquidity confirm each other before adding size.